Good afternoon, everyone. Today, we are going to talk a little bit about bank reconciliation. Last class, we talked about closing entries. We're closing out our transactions to our income summary. Today, we're going to talk a little bit about bank reconciliation. So the question may be, what is a bank reconciliation? Why do we do reconciliation? We're going to talk about that as we proceed. So what is bank reconciliation? It is a process of matching and verifying your amounts, your transactions in your account. And then you're going to look at it against the bank statement. So you're comparing two things, right? Your transactions and what's on your bank statement. Why do we do that? We want to ensure that all of our accounting records are accurate and that what is on our records is also in our bank statements. So we have to do reconciliations for all of our accounts. Sometimes we have to reconcile each individual account. For example, we have to reconcile our cells, we have to reconcile our squares, we have to reconcile whatever form of payment that client that you're working on their books are doing prior to going ahead and reconciling your bank statements. Someone said, why? Because sometimes not every amount that is inside of a client's transaction is a sales or is something that is bringing revenue. Everybody got that? So in some places, as we talked about in class, some companies says, no, we're not going to do sale. Sale can come from your friend, it can come from your mother, it can come from your father, it can come from anywhere. And you can claim it is a sale. So we need to reconcile all of these prior to adding them in our books. Everyone understands? So we have to make sure what we consider revenue is true revenue. Now, the first thing I have here is why we reconcile account fraud. Ensure no one is making unauthorized transactions. Many of us have seen it. People come, make a fraudulent transaction on our Amazon. They make a fraudulent transaction on our bank account. So we have to make sure those fraudulent transactions are not showing up in our records. And also that we're reporting them as they go along. Sometimes in fraud, we get notifications from the banks that someone has used our account to make a purchase. But what if we don't get a notification? What if it looks normal? What do we do? So again, we reconcile for fraud prevention. What's another reason we reconcile our accounts? And I'm talking about our bank reconciliation primarily. But again, when I say the accounts, I'm talking about the Zelle. I'm talking about the Cash App. I'm talking about the Square. I'm talking about the Google Pay. I'm talking about the Apple Pay. Everybody got that? Sometimes we have to reconcile those as we go along, as we have discussed and talk about several examples from your experiences and from my experiences in class. So again, error detection. We are going to fix errors and we're going to identify errors, whether due to data entry, overlooked transaction. Sometimes the bank make errors. Everybody got that? So here I write here about when people swipe their credit card, but they, in their books, they record it as cash payment received. So we have to reconcile those. Everybody got that? You close out the drawer, but you didn't get payment from the client. We have to reconcile those. And many companies that you take money from clients, then you have to reconcile them and also reconcile your bank accounts. So many times, in my experience, I have had to reconcile cash draw prior to going ahead and reconciling whatever other transactions we have. So we need to fix the errors first before we move on to our bank reconciliation. Now, the next thing that while we reconcile accounts is for accuracy. We need to make sure the amounts are relevant, make sure the amounts are matching. So this is another reason why we reconcile our accounts. When we're talking about the bank reconciliation, and we're talking about all other payment accounts that we have to reconcile. Ensure amounts are relevant and matching. Now, why are the reasons why we do bank reconciliation? We need reports for financial management. We need to see the health of the business. Can we pay ourselves? What amount do we report for our health insurance? Healthcare.gov is here self-employed. What do you report? So we need to make sure we're recording, looking at our accounts, looking at our payrolls, and make sure our amounts are correct. So there are various steps that we take when we need to reconcile accounts, and we'll go over that in class. We'll go over the textbook method of reconciliation. We'll also look at the other methods of reconciliation, where when you pull in the transactions from your bank statements, you have to also classify each account. So you look at each account that you're pulling in. And when you look at each account, you say, okay, this is real cash account. This is cost of goods sold. This is sale. This is a real expense. So we have to classify all these accounts prior to reconciliation. So thank you again. We'll see you in class. And again, we'll go over more on examples of how we actually do the reconciliation as we learn accounting. Thank you.